Hey there! Today, we are going to be talking about how to prepare to sell your cannabis business. The $2.1 billion True Leaf Harvest acquisition is paving the way for a boom of M&A activity in the cannabis industry. 2021 may very well be remembered as the year that put market-leading cannabis businesses and MSOs in a position to acquire operators in a way that we've never seen before. Furthermore, this is going to put hundreds or thousands of successful small to mid-sized cannabis operations in an advantageous position to sell their businesses to well-funded buyers looking to aggressively expand. For cannabis operators open to selling as part of their exit plan, it is never too soon to implement core financial and operational changes that will maximize the value of your business and ease the due diligence process. So the topics we'll cover today include details of a case study of a vertically integrated cannabis operation in California, key players involved in selling a cannabis business, types of cannabis M&A deals, how to position your cannabis business to sell, and final thoughts on preparing to sell. Before we dive in, please remember to like this video and follow our channel for the latest cannabis business insights. So let's jump in. The information contained in this presentation is meant for guidance purposes only, and not as professional legal or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. Our team of cannabis CPAs and advisors recently worked with a vertically integrated cannabis operation in California to support them in completely turning around their business with the end goal of acquisition. When we began working with our client, their books and taxes were in disarray. They did not have a standardized cash tracking system in place, and as a result, they were 6 months behind on their books, and even further behind on their income, excise, cultivation, and sales taxes. The owners felt that they had untapped revenue potential and were at a high risk of an audit that could potentially cripple their operation. Fortunately, these were familiar challenges for our team of cannabis accountants and advisors at Green Growth CPAs. On an expeditious timeline, our team was able to help our client navigate, plan, and pay off their tax liabilities and penalties, streamline and standardize their reporting and bookkeeping processes, improve their inventory management, and decrease costs and operating expenses. Within 2 years of implementing these strategic changes, our client increased their revenue by, guess how much? 6.7 times, growing from $3 million in sales Q4 of 2018 to $20 million in sales of Q4 of 2020, with a 25% EBITDA margin. As soon as we were able to help our client improve financial processes and grow their sales, we began working with them to put their business in the best possible position to sell. The prep to sell process requires the oversight, consideration, collaboration, and expertise of several key players that you need to help you work through the complex multi-tiered process of selling a cannabis business. Capital advisors and investment banks, which performs due diligence, prepares marketing materials, and markets the business for sale. Accounting and finance team, which prepares your books, accounting processes, controls, compliance, and supports due diligence. Legal team, which will manage contracts, perform due diligence, and other essential duties. Third-party valuation firm, which provides an unbiased valuation of your business. And prospective buyers. Could be another company in the same vertical, companies in different verticals, or a private equity firm, to name a few. Overall, cash deals are the more secure way to sell your business. If you can find a cash buyer, this is often the cleanest and simplest business sale transaction you can make. Stock deals are less secure than cash deals, but can offer more upside as well. For a stock deal to close effectively, you really need to understand the process and mechanics of how to identify a good buyer versus a bad one. This is another area where your accounting and finance team can step in for support to assess your buyer in terms of how much their company has returned up to the current date, their level of and proof of capitalization, their current valuation, and any restrictions on the sale of the stock. Streamlining and standardizing our clients' financial reporting and tracking not only turned around the business and maximized their sales potential, but also substantially improved their viability and transparency to prospective buyers. From there, our team began working with our clients' management to give them the tools, tactics, and necessary steps to review and benchmark their results against their primary objective of selling their business. Step 1. Align your sale package. First, your company deck should serve as the initial package of materials you use to pitch your business to potential buyers. Your company deck and/or company overview should include an overview of your company, which is the story of your business, business history, mission, etc., a description of all products you sell, including brands, and potential distribution channels with which to reach customers, and charts, graphs, and appealing visuals that showcase your company's progress and growth. Financial statements also provide a complete and exhaustive overall snapshot of your business's financial position so your buyer can assess the value and viability of your business. Core components include balance sheet, income statement, statement of cash flows, statements of shareholders' equity, and other key financial documents, including tax returns. Putting together non-disclosure agreements, NDAs, is another critical step to selling your cannabis operation. NDAs are the first line of defense protecting the intellectual property of your cannabis business and protecting your buyer from potential lawsuits. Step 2. How to set the value of your cannabis business. A business is typically valued with one of 2 to 3 different methods. Method 1. Discounted cash flows. This involves analyzing the cash flow of your business over a certain number of years, discounting those future cash flows back to present value, and then multiplying that figure by the appropriate discount rate. Method 2, the Public Company Guideline Method. So this one uses the price to earnings ratio, PE, that a public company has, which you can use to approximate your business's market value. This method will use your business's earnings before interest, tax, depreciation, and amortization, which is EBITDA, stratified out over a number of years, normally 2 to 5, to determine the value of your business. For example, so say your business generates an EBITDA of $1 million, and you use a 3-year cycle or multiple to value your business. The sale value of your business using this method would be $3 million. Method 3, the M&A Guideline Method. This one incorporates a price to sales ratio, which you can use to estimate your business's saleable value. This method of valuation prioritizes your company's ability to generate operating cash flows. Step 3, how to market your cannabis business for sale. To be able to market your cannabis business to sell, you need experienced connected brokers and/or a financial team who can seek out and vet qualified buyers. Our team at Green Growth CPAs can help your company put together a comprehensive Canna MLS listing that will place your business on a widely used public directory for cannabis operations that are looking to buy. We can also reach out to our internal list of investors, known buyers, and business contacts, including cannabis MSOs and/or cannabis investment funds and groups that may be in the market to buy. Step 4, prepare for due diligence of your cannabis business. Think of due diligence as a comprehensive appraisal of a business for you and your buyers, giving you the ability to evaluate all of the features of your business that contribute to its total equity. This is a formal process used to establish your business's assets and liabilities, along with other key metrics to evaluate its commercial sales potential. Due diligence is key for providing full transparency to your buyers, giving them a systematic way to investigate and analyze the risks and benefits associated with acquiring your business. This step of the process requires a legal team and CPAs on both the buying and selling end of the deal. You'll need a qualified CPA to support you through due diligence while preparing your books, controls, and accounting processes for your buyer. Your buyer will also need a CPA to review the provided due diligence and the requisite financial documents. Step 5. Draft your sale purchase agreement. You will need an attorney on both sides of the deal to see the sale through. Your business's attorneys will need to work with you and your CPA to draft the agreement, which will likely need to go through multiple rounds of review from both sides of the buying and selling parties before it's approved and finalized. The sale. Throughout the M&A process, our team of CPAs and advisors performed key duties to support our client, including developing financial projections, providing a preliminary valuation to assess market value, advising management throughout the business sale process, preparing due diligence documentation, including financial statements and establishing a data room, etc., and assisting throughout the buyer due diligence process. In the end, our client was optimally prepared and received a lot of interest in multiple offers for their cannabis business. When all was said and done, our client was acquired in an all-cash deal for $29 million. This was after working with our team to scale their revenue. This resulted in a final cash sale price of their business that was 1.38 times multiple of their annual sales. Preparing a cannabis business to sell is no small task. It is a multi-step process that requires massive oversight and several parties, all with their own specializations and expertise. At the end of the day, you need solid financial statements, quick and clean due diligence, well-documented processes, standardized controls, and a qualified accounting team to make the sale possible. If you need assistance or support with turning around your cannabis business or positioning it in the best way possible to sell, contact our team at Green Growth CPAs at 1-800-674-9050 or on our website at greengrowthcpas.com. Thank you so much for your time. We hope this information has been helpful. If you have any questions or want more information, please leave us a comment below. And be sure to like this video and give us a follow to learn more about the cannabis industry.